All right, folks, buckle up because we're diving into some serious stock market action. Remember that analyst who called Palantir's last massive rally? Well, they're back, and they're saying it's about to happen again. Are they crazy, or do they see something the rest of us are missing? Let's find out. Dramatic music sting. This isn't some random internet guru. We're talking about a seasoned analyst with a proven track record. They've been following Palantir for years, understand their business inside and out, and aren't afraid to make bold predictions. But what's fueling this renewed bullishness? The answer, my friends, lies in Palantir's latest earnings report. The company absolutely crushed expectations, showing impressive growth in both revenue and profitability. But it's not just the numbers. It's how they're growing that's really exciting. Show a simplified graphic of Palantir's revenue growth. Palantir's bread and butter has always been government contracts, and they continue to win big deals. But they're also making serious inroads into the commercial sector. This diversification is key to their long-term success. Think about it, data analytics is crucial for every major industry now. The commercial sector is where Palantir's growth story really gets interesting. They're helping companies make smarter decisions, optimize their operations, and gain a competitive edge. And they're doing it with their incredibly powerful AI-driven platform. This is why the analyst is so excited. So, what's the new price target? The analyst is now projecting Palantir to reach, insert specific price target here, within the next time frame. That's a significant upside from where it's trading right now. But is it realistic? Let's dig deeper. Now, let's zoom out and look at the bigger picture. This analyst's prediction isn't just about Palantir. It's about the entire ecosystem of financial news and investment advice. The immediate impact, at level 1, is all about information dissemination and market volatility. Articles like these provide investors with insights, which can lead to more informed decisions, or, potentially, a whole lot of market craziness. It's a double-edged sword, right? At level 2, we're talking about short-term market trends and the analyst's reputation. If this prediction pans out, their influence will skyrocket. Think of Cathie Wood. Her actions are heavily publicized and influence investor behavior. But if they're wrong, well, credibility takes a hit. The focus on short-term price targets can also distract from long-term investment goals. Are we gambling or investing? That's the question. Level 3 brings us to long-term investment strategies and industry regulation. Consistent analysis, when reliable, can lead to more sound investment strategies and a more stable market. But if the news cycle becomes dominated by sensationalism and unreliable info, it can discourage long-term investing and damage the reputation of the entire financial industry. We need trust, not hype. It's not just finance, though. Think about the websites that deliver this information, like TheStreet.com and Yahoo. At level 1, we're looking at website functionality and user experience. They use JavaScript and cookies to enhance the experience, but that can also create barriers for users who prioritize privacy. And that dreaded access denied message? Huge negative experience. Level 2 brings us to data privacy and advertising effectiveness. Data collection allows for targeted advertising, which can increase revenue for media companies. But concerns about data privacy could lead to stricter regulations and more people using privacy-enhancing technologies. It's a constant tug-of-war between personalization and privacy. And level 3? The future of online content and monetization. Can we find a balance between data privacy and personalized advertising? Or will the constant intrusion lead to a decline in online advertising revenue, forcing media companies to explore alternative models like subscriptions and paywalls? The game is changing, folks. The socioeconomic impact is the most important. At level 1, we have investor wealth and financial literacy. Access to financial news can empower individuals to make better investment decisions, but misleading information can lead to losses, especially for less sophisticated investors. Knowledge is power, but misinformation is a weapon. Level 2 focuses on retirement planning and economic inequality. Improved financial literacy can help people plan for retirement, but if access to financial information is unevenly distributed, it could exacerbate economic inequality. The focus on high-tech stocks might benefit wealthier investors more than those with limited resources. Are we creating a two-tiered system? Finally, level 3. Economic stability and social mobility. A well-informed and financially secure population contributes to a more stable economy. But if financial markets are driven by speculation and misinformation, it can lead to instability and social unrest. A widening wealth gap could limit social mobility and create further divisions. The stakes are high. But before you rush out and buy Palantir, let's talk risks. One major red flag? That access denied message from TheStreet.com due to suspected automation. This suggests potential issues with data scraping. If you're trying to collect data automatically, this is a huge problem. You could get blocked, and your data acquisition will fail. Another risk is the reliance on JavaScript. If JavaScript is disabled, the data you get might be incomplete or inaccurate. And don't forget about cookies. Yahoo's cookie consent prompts highlight the importance of managing them. Failure to handle cookies correctly could lead to incomplete data or privacy violations. It's a technical minefield. From a business perspective, relying on a single source like TheStreet.com is risky. If you get blocked, you're out of luck. Also, scraping websites without permission can violate their terms of service and copyright laws. This could lead to legal trouble. And if the data you're scraping is inaccurate, it could lead to bad investment decisions. Ethically, scraping raises privacy concerns, even if the data is publicly available. You need to be transparent about how you're using the data and be aware of potential biases. Excessive scraping can also put a strain on the website's resources. It's about being responsible and respectful. And let's not forget the Cathie Wood factor. Her investment decisions often move markets, especially in tech stocks. Does her firm own Palantir? If so, that could add even more fuel to the fire. Keep an eye on her portfolio disclosures. There's also the potential for disruption from companies like DeepSeek, which could challenge NVIDIA's dominance in the AI space. Palantir relies heavily on AI, so any changes in the AI landscape could impact their business. The tech world is constantly evolving. Okay, let's play devil's advocate for a second. What if the analyst is wrong? What if Palantir's growth slows down, or competition intensifies? It's crucial to consider the downside risks before making any investment decisions. Don't get caught up in the hype. So, what should you do? First, review the terms of service of any website you're scraping. Implement robust error handling in your scripts. Respect the robots.txt file. Use rate limiting to avoid overwhelming the website. Consider using APIs instead of scraping. Validate your data. And most importantly, be ethical and transparent about how you're using the data. Ultimately, whether or not Palantir is a buy depends on your individual investment goals and risk tolerance. The analyst prediction is certainly exciting, but it's just one piece of the puzzle. Do your own research, consider the risks, and make an informed decision. Don't just blindly follow the herd. Uplifting music begins. Palantir is a fascinating company with a ton of potential, but like any investment, it comes with risks. Stay informed, stay vigilant, and always remember to invest responsibly. Thanks for watching, and I'll see you in the next video. Don't forget to like and subscribe.